Hello, traders. Gary Wagner with the gold forecast here. Approximately a quarter to 11 a.m. in Honolulu, Hawaii. Markets are closing in approximately a half hour. This is June 8th, Wednesday, and this is the daily report. We do have gold trading under pressure today. It is down about $7 currently. As you can see, the print on the board, 1537.22. We are looking at a daily chart in Henkin or average format. We'll turn that into a candlestick chart in a second, but the reason for putting it into Henkin format is quite simple and quite clear. We have gone red again on this last set of indicators, this particular Henkin candle right in here. And that is giving me a little bit of, call it cause for alarm or concern, in that my sentiment is that we do appear that we might in fact be coming a little bit top heavy in this area. And as you can see, we've had a series over the last couple of days of lower highs, not necessarily lower lows, although we did get that today. And for that reason, I'm probably going to recommend that we tighten our stops up, because we have some real nice profits in this trade, and I certainly don't want them to completely erode. If in fact what we are seeing is, let's say for example, that this is going to be our our 1, 2, 3, 4, 5 on our fifth wave, my sentiment or my feeling is that we certainly want to be able to derive or pull our profits that we've gotten down here from 1488. That's quite a wide band, and I certainly don't want to see that really erode too much more than it has. So in order to do that, we really want to take a look at the various lows that we've gotten, and for that reason I'm going to put up our data box, and by doing that we're going to take a look at a couple of these lows that we have. This low, for example, you've got a low around 519. Here you get a low of around 523. It does come back, and today's low that we got was right around 1530. So my recommendation is going to be to take our stops to 1525. That's 1525 on a protective stop. Now, I might be failing in that I am erring to the side of caution, so to speak, because my belief is that we can always re-enter the market. I have no fear about buying breakouts. I have no fear about buying dips, as you're well aware for those who have been with me for a while. But I certainly like to lock in profits when we have them. And as long as I think that this market is genuinely carrying itself higher, then my sentiment is that the correct projection is to keep that a very, very loose stop. Now, what we are witnessing here is a consolidation, and the market might in fact consolidate and then flip back up. And so for that reason, I'm not saying let's exit the trade, but what I am saying is that by placing our stop at 1525, we should avoid any of the lows were below the low of today. And I do see some top activity, and for that reason, as I say, I am recommending that we tighten our stop up. Now, we are currently looking at our 628-minute chart. Reason for me pulling that out right now is that my sentiment is that it pretty clearly shows this kind of rounded top that we've gotten lately. And you can see we are currently recouping off of these lows right in here. But at the same time, we have had the inability for this marketplace to break above that $1,550 barrier. That barrier also comes at a point that I believe is a pretty critical barrier, and that critical barrier being that 78% retracement. And of course, for those of you who have been following me for some time, you realize that the retracement that we're looking at right here is a fairly simple Fibonacci retracement, which is simply derived by looking at this particular marketplace, this high here, 1577, this low here, which would be just below 14, I believe 1461 is the low print that we hit, and then when it came back up, our secondary low was 71 right in here. So for that reason, I feel as though we do want to protect ourselves. Now also, when we take a look at where I'm placing the stop, by placing it at 1525, we are putting it below this last high that we got, and that last high matches to this one area right in here, which is a secondary high that we got after the market came down. This was the first print or the first move that made up. So again, traders, we're going to trail our stops 1525 on a protective stop to lock in the nice profits that we have on this trade. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange